Hi guys, welcome to FX Chronicles. This is Azam, and I know it's been a while since I've done a video. It's just because I was thinking about how to bring this topic to knowledge because a lot of people talk about it, but in theory, but they don't show necessarily the numbers of how you can compound and make it work for you. So today's topic is risk management. Pretty much the key to success in trading, whether it's stocks trading, Forex, commodities, just whatever, options, yeah, just whatever. So before we get started, just a quick disclaimer here that this is just educational purposes. I'm not a registered financial advisor, so I can't give you guys any kind of investment advice in that sense. Okay, so let's get to this wonderful Excel sheet. So many numbers. What's going on here? Okay. So basically, risk management is how much of your money in an account are you trading or are you risking when you're in the markets, when you're trading, whether it's trading Forex, whether it's trading stocks, whatnot. Okay, so there is I guess a general rule that everyone uses in trading, and everyone says that. I say it all the time to my students. To use it, it's to risk between 1 to 2% of your account balance per trade. And how does that work? How does it work with the trade alerts that FX Chronicles provide, or in the long term as a trader, how does that work for you? So let's just look at some numbers. Let's just say you have an account worth $2,000. Okay, you're just starting off, you have a $2,000 account, which a few of us know that if you're using FXCM as your broker, that's the minimum requirement. Other brokers don't have that. But 2,000 is a decent number to start trading with, I personally believe. Now, if you're risking between 1 to 2% of your entire account balance per trade, that would be $20 to $40. Okay, the way I send out alerts, it's in such a way, our goal is whatever we risk, we make at least that much money back per trade. So let's just say, even if you played it in a very conservative way and you just took our first or second targets, you would be making between $20 to $40 per trades. Okay, so once again, you have an account of $2,000. You're risking only $20 to $40 on on any given trade, and the goal is to make at least this much. Okay, now here's just some basic data to show you how this turns into, the amount of money that you can make. Let's just say you take 50 trades per month. That means you're taking about 12 to 15 trades per week, or between 2 to 3 trades a day. Okay, and you have a 70% success rate of about 35 trades. That means in any given week, you're getting out of 12 to 13 trades that you take, you're getting about 9 good trades that are reaching your first target of at least a 1-to-1 risk reward ratio. So that's what is success considered as. That means if you're risking $20, you make at least $20 on that trade. That's a successful trade. And then unsuccessful trades are where you lose all the money that you risk, whether it's 20 or 40. So this is how the numbers come out. Let's just say you risk only $20 a trade, which is 1% of your account, and you took 50 trades per month. You had 35 successful trades. That means you made a profit of $700, but you had 15 bad trades as well. So you had a loss of $300 as well. So you made a minimum of $400 return for that month on a $2,000 investment, which equates to about 20% return on the investment. Okay? And let's just say you risked about 2% of your equity per trade, so that means you were risking $40. Same stats, 35 successful trades, 15 bad trades, you make a return of $800. Now, how does that turn into actual numbers over time? So we'll look over here. Let's just say you made $400 profit in the first month, okay? And if that trend continues, this is data based over 20 months. Let's just say each month you made 400 and you just let it compound. In about 20 months, if you started off with $2,000 and you didn't touch it and you just followed the 1-to-1 risk reward, you would have $76,000 return on investment. Now let's just say you made somewhere between the $400 and $800 that month. So let's just say you made $600, which would be a 30% return on investment. Obviously, you see very quickly that you get $380,000 in a month. And this is risking between 1 to 2% and just having that consistency. Now, let's just say you were risking 2% on every single trade, and you still had this record of where you had only 70% success and 30% failure. You made $800 or 40% return per month consistently, and you just let it compound. You obviously see right here, in about 19 months, you can literally hit $1 million on a $2,000 account. This is quite possible. These kind of numbers are possible. Here, I give you an account of $2,500. Same thing. Let's just say it's 20% return. You're making $500 a month. You'll make almost $100,000 in 20 months. You risked about $750 a month, or about a 30% return. You can make $475,000 on a $2,500 account. And if you were making about $1,000 a month or 40% return a month, you can make $2 million. These are actual numbers that people can get in trading, but it's about consistency. And just for those who might have higher accounts, $5,000 accounts. On the 30% return, if you're making $1,500 a month or 30% return on investment, you would almost hit $1 million in 20 months. And if you were on the higher upper bound, you would make over $4 million. Now, these are just numbers for you to work with, and we work with our data all the time. We try to pull over 70% return on our 70% successful trades per week. There is a lot of trades where we might be risking $20, or let's just say we are risking $40, but we end up making literally, and you guys have seen me post about this, 5, 7, even 10 times as much money as we risked. So that 20% return that I was talking about, sometimes you make that in one trade. Yes, last week alone we had a return of over 14% for the week on the entire equity. If you keep the math on that, you're making over a 50% return on investment for the month. And we weren't risking too much. We were risking between about 2% on any given trade. But it's because we're looking at bigger targets. We're looking at long-term success in these. But if you are playing a conservative game of risking 1 to 2% per trade, you have a very good chance of having some really nice returns based on how much you're investing. And that's the key, is that you don't have to be too greedy. You don't have to risk 5% of your account on any given trade. No, 2% is sufficient. You just have to be disciplined enough to let it work for you. Give it time, and it works out pretty well. I don't know how else I can actually emphasize this 1 to 2% risk, or even not even that. Let's just don't even look at that. Look at just the number. Like, just don't trade more than $40 on a trade. You know, you're risking $40 because, you know, when you're trading and you're risking only $40 a trade, it's not, you don't get as emotionally attached to that amount if you were risking, let's just say, $200 on a trade, because that's 10% of your equity versus $40 is just 2%. And that's how we want you to look at this, is that this is not a get rich quick scheme necessarily. It's consistently building upon building upon building. It's like a business. You're not going to make hundreds of millions of dollars in just one night. You're not looking to hit home runs every time. But you have to just build on it. It's easy to say all these things that, oh, stick to 1 to 2%, because I personally know, and I'm actually personally guilty of this, is not sticking to my own rules at times, because I would be so sure that the trade was going to go in a certain way and it wouldn't, and I would just end up losing a lot of money. This is the number one reason why people don't succeed in this business, is because they risk too much. Top hedge fund managers, top traders, in fact, Paul Tudor Jones has this amazing documentary where he talks about his own investment strategies, and he always talks about only risking 1% on any given idea that he had on a trade. And that's the key, that you're psychologically prepared for failure. You're fine with losing that 1%. Whenever I go into a trade, I don't go with the mindset that, I'm going to make so much money. I go with the mindset, hey, what is my risk? What is my worst scenario in this trade? How much am I going to lose, in worst case scenario? So with that, am I comfortable with that risk? Am I comfortable with taking this trade? And if you're risking $20 on a trade, you'll be like, okay, you know what, that's fine. I can, let this trade run, and the worst thing is I'm going to lose $20. But if I'm successful, I'm going to make at least $20. And over time, as you can see, it's you have to work on it. You have to sort of hustle for it. Over time, you would see that it would be worth a good amount of money. You would be able to really compound it. And see, let's just say you've been making a 20% return on investment per month. Over the next 4 months, what happens? You get to $158,000. Then a couple of more months from there, you're at $200,000. So these things can happen, and you just have to stick to your risk management. If you're not comfortable with taking it on a percentage level, take it on a dollar number. Look, I try to break it down in the best way, where I'm putting successful trades also and marking the unsuccessful trades. And it's imperative that everyone looks at it in that sense, because that's the reality of this game, of this business, is that you're not going to be right every time. I'm not right every time. I would have a wonderful week, the first half of the week, where I would have 9 trades and all of them, reaching multiple targets, where I would be up about over 20% return on investment. But then the second half of the week, I might just lose on the next 5 trades, and I end up the week at 10% or 15% return on investment. It happens all the time. So it's about you being comfortable with the fact that losses are part of this game. It's just how much you lose. And that's the kind of mentality I want you to go into trading with, is, are you comfortable losing this money? Because there are people who blindly take my trade alerts, and I feel really appreciated that people have that kind of level of trust with how I send my alerts. But I always tell them, please manage your risks. Just don't enter 3% of 5% of your trade on one trade, or equity on one trade. Manage your risk, because even I don't know which trade is going to work out or not, because I don't know how the market's going to move. I'm only basing it on probabilities of, hey, previously this is what happened when the price was in this range. That's what I'm expecting it to happen again. So that's just really what I want to touch base on, and really want to, not just my students, but anyone who's watching this, whatever trade or whatever asset you are trading, just stick to this rule, and you'll be in this game for the long haul. You will be very successful, because it's a numbers game at the end of the day. Look right here, it's a numbers game. You will have good trades, you will have bad trades, but it's about how you manage them. If you're risking $100 on each trade of $2,000 account, you will always be under a little stress, because you're thinking about getting out of the trade if you're down by 50. at some point, and then you get out of the trade, and then it goes, in your direction. So you need to be comfortable enough to let the trade move. It happens all the time that I take a trade and let's just say I'm risking 2% of my account and I'm already down halfway before it starts to go back up. It happens. And that's just how trading is. Trading can be either a very stressful endeavor, or it could be a very logical approach to things. Yeah, it's still going to be stress because you're dealing with money. There's emotions involved. But it's about, how much do you risk? Warren Buffett has a wonderful quote where he says that to test the waters, don't go in with both your feet. And that's, about risk management. That you don't need to dive in completely. You just, try it slowly and build your wealth from there. That is the thing why so many people fail in this. They might have amazing strategies, but that's, the more you risk, the more you're setting yourself up for, in a way, for failure, because you can still have amazing returns on investment per month and not risk too much. So that's all I really wanted to just talk about in today's video lesson for all of you. If you have any questions whatsoever, please contact me, fxchronicles.com or fxchronicles.com@gmail.com. I have my course going on right now for $75 one-time fee. This course was initially for $600, and the reason for the low price is that I want to make it affordable for anyone who wants to learn, that is passionate about it, whether you're a high school kid, college student, or just someone who wants to get into trading but doesn't want to pay thousands of dollars in fee, because I believe that that's what I want to do, is as part of my legacy in life, is that be able to make education, first of all, quality education, accessible and affordable for all. This is a passion of mine, and I would love to share it with you guys. So check it out if you're interested. If you have any questions about it, let me know. You can join our alerts. We have an amazing team of amazing traders that are working with us, and just the success is there. It took time to build it, but we have a solid model that works despite the failures we might have from time to time. So once again, guys, you have any questions, feel free to contact me. I really appreciate all the comments that I get from you guys all the time, and I really hope that this video gets to you, that you really understand what I'm trying to get the message out here, is that it's not about being a gambler. It's about really managing your risk and playing the game correctly. It's a long-term game. It's a numbers game, and a lot of people get really upset if they have 2 or 3 bad days of trading. They completely lose hope, because in 2 or 3 days they've sometimes lost half of their accounts or even more, and that's just silly. You don't need to be doing that. That's not how trading is done. It's done over time. You don't want to be constantly stressed out about how much you're risking in the account, and take it slowly and be comfortable with it. So once again, I hope you guys enjoyed the video. Leave a comment, contact me, and thank you so much for everything. May the pips be always in your favor. Alright guys, have a good one. Bye.